Welcome back to another exciting show of the About That Water podcast, where we help the sandwich generation build strong financial habits so that they can talk about money, spend money, and enjoy their money with confidence. Today, I have the wonderful opportunity to bring somebody back on from episode 330, and that was released earlier this year in February, and his name is Lane Kawaoka. Did I say that right? Please tell me I did that right.
Close enough. Author of The Wealth Elevator is him.
Author of The Wealth Elevator, yeah. It's Kawakoa.
The Wealth Elevator.
Okay. I really want to get it right. All right. By the end of the show. Got you. So, Lane, you've been doing quite a bit of stuff since last time we talked. And you wouldn't even think that, almost 8 months have passed and you've accomplished so much. So what has it been like, putting out this book and really getting things going for you and your family?
Yeah. I think, when I was kind of getting started, I never realized that there was different tactics out there. I guess I kind of knew that inherently, but I didn't quite understand the frameworks of, hey, this is what you do when you don't have a job. You're under $50,000 salary. Here's what you do when, you're not yet $1 million net worth, but you have a good paying job. Here's what you go do when you're grinding from 2 mil to 4 mil. And then here's what wealthy people do, right? When they've kind of got that cash flow coming in, they don't really need to trade time for money and work anymore. And so I put all that in this kind of construct in the Wealth Elevator, and I broke it down by paradigm. Because if not, you have all this financial advice floating around out there, but it was more important to when that advice or tactics apply to which paradigm of the journey you're in.
Yeah, and I love the way how you broke the book down to kind of really bring in those levels, because we always know in finance that each level provides another level of integrity, boundaries that you got to set, things you got to isolation, and then also just from a, not to say a status, but almost a sense of exclusivity, because you don't want to rub other people the wrong way, or just kind of like, hey, I just want to go out to hang out, but I don't really want to be known that I'm hanging out. If that makes sense.
Right. At a certain level, when you go, much higher, everything is business, right? A lot of times you turn more entrepreneur, and, your social circle is not just the people you hang out with, but it's the people you do business with or people who connect you with business opportunities. That's why, when I first graduated college, became an engineer, I was just in the W-2 world. I wasn't aware of this construct, of your network is your net worth, as they say.
Yeah. There's also, we were just talking about it before, is the dating scene is completely different, because you can actually lose quite a bit of money if you're not talking the same language, especially when they're not in your network and you're just trying to be out there.
Yeah. That kind of came up organically, right? But yeah, I was talking to, when I talk to my clients, and we always, do an intro call, a complimentary call for accredited investors. And this is, I've done thousands of these calls at this point. It's fun to me, but I've kind of on the edges of it. It's, we talked about family and money and divorce. Number one cause of divorce is money, right? And it's always interesting to see who shows up for that call. Typically, 90% of the time, it's just one person. And whether it's the guy or the gal, there's always one person that has the lead in terms of finances. And the other person ranges from apathetic to they don't want the other person to do anything, right? But it's always interesting that, typically you have one person. It's very rare you have both people who came from the same socioeconomic level, and that there's values that come with it, right? Scarcity issues, abundance issues. It's very rare that you see some people from two different, a $10 million net worth family marry somebody with, grandma had 500 grand, right? It's just very rare, unless you have I mean, they may date, right? And I guess that's what online dating does. It's crazy, right? It just connects these people, whereas before the access to these people interacting wouldn't have been there. But I mean, you got to carry on a relationship with this, right? So you have to resolve these conflicts. And unless some people have done a lot of inner work and coaching to do this, it's very hard to align those different values. The gap there.
Yeah, and it's a mindset thing that I'm thinking of because sometimes we feel as though we are doing what we can do with the money that we have. But when you start getting to those different levels of finance, do you find that the internet actually levels the playing field, or is that just too vague right now?
I mean, in terms of like the knowledge is out there, right? Like, I mean, you
Hmm.
can learn how to do anything on YouTube and AI now. Um, so if you wanted to learn about alternative investments, investing in syndications, and go well beyond the 60/40 stocks bond, split, in that type of world, the information is out there. I think the hard thing is we all play around with AI. If you have some working concept with it and life experience in it, your experience extracting more useful knowledge from the LMM is going to be a lot more successful.
Yeah, and because going back to your book, when I was reading it, one of the chapters, it was chapter 3, that that kind of got me because I was thinking about this, which is the influx of money that comes through, and how do you actually stay humble as your income increases because you're saving more and you're investing more. How did you manage to not go into the rat race? I know we mentioned it a little bit in our previous episode, but can you just talk about that a little bit more? Which is how you managed to maintain your vehicle instead of upgrading it to like your rest of your colleagues.
Yeah, I mean, I'm just a unique character. I almost find a little bit of my identity in that, just doing the same thing as I once did as that stoic. I'm not quite as bad as the minute Mr. Money Mustache dude that drives a bike to get his groceries, right? Like, I'm definitely more on that fat fire side of the spectrum. But I think maybe it comes down to values, right? Like, like one of my values is like not wasting things, or always being a good steward of what you have, whether that's, you, don't buy things that you don't need. And that also comes down to, some of my clients, they have paid off $2 million houses,
Wow.
and that money is just making 1% there as a rental property. I mean, at the very least, get that thing in a damn T-bill and make triple, quadruple that, or life insurance, right? Something that's very stable. You don't necessarily need to put that thing in S&P 500, take on more risk and possibly more return there. But, I think you got to look at your portfolio and like being a good steward of that money, right? Especially if you work so hard to get it, like you has to keep working. Um, I guess back in ancient times, right, when people had farms, same idea. You may have 200 acres. You got to plant seeds in there. You got to work the land, right? Don't just let it go, get all weeded and kind of just sit there, do nothing.
Yeah. Well, I mean, sometimes we just lose sight of it all. It's just like we have so much going on, we don't know where to go. Um, so is it? What is the? I guess you could say, what should we do to kind of keep our focus so that we can actually achieve what we want to do?
Well, I think that's at that point, it's like figure out where you are now, right? Like, I mean, and this is going to sound super obvious, but like if you got $100,000 net worth, your goal is you're on the first floor of the wealth elevator, pick up the book and figure out how to get to a million. We kind of talk about buying little rental properties. That's what I did, out of college. Eventually I had 11 of them, these little turnkey rentals in 2015. And then just another data point example, like if you're already at $1.5 million and a credit investor, um, and you have a rental property or two, now might be the time to step up to bigger projects and re-leverage that lazy equity that you've worked so hard to get there. Unless, I mean, depends on your goals too, right? Like, I mean,
Yeah.
I don't know very many people that are happy with $2 or $3 million net worth. Like, to me, that's not very much in this day and age. I think the goal for most of my clients is at least get to 4 or 5 million, because when you apply that 4% rule and you go into more stable, lower return type of investments for the long haul, that's not going to produce that monthly cash flow for you. And again, most of my clients are looking more for something greater than $10,000 to $20,000 of passive cash flow a month. So you're going to need, 3, 4, $5 million to produce that for you at least.
I mean, because my number was actually around 2.5 for my fire number. Because I was like, at the end of the day, really all I need is about maybe 40,000. But then with the cost of inflation, that's how I was thinking like 2.5, maybe 3. But if you're saying that everybody is usually breaking up between 4 to 10, um, something to think about.
Yeah. So you're 40,000 a year or 40,000 a month?
A year. I was going
Yeah.
a yearly.
Yeah, bro. I don't know. I don't know about that, man. I mean, that's cool. That's cool enough, right? Like
Right, right.
that's your fire movement, folks. And again,
Yeah,
I'm not gonna say that's just not me,
yeah.
or a lot of other people I know out there. I mean, yeah, maybe if your parents gave you a house to live in and you remove half of your expenses that way, but
I
yeah, I
see.
mean,
No.
most people I know that they need at least 10 grand, even if they're pretty frugal per month. Um,
Mm, okay.
and you got to I mean, you can't just rely on your investments doing 8, 10% or more, right? You got to be more conservative than that. Um, that's, maybe even 3 or 4% if you want to be more conservative. But yeah, I mean, I think it's a good intermediary goal, right? Like, it depends on some people, like where they're at. Like, if you're under $1 million net worth, maybe you shouldn't be listening to this conversation because you'll just get depressed, right? You just
Yeah.
need to figure out the next milestone, right? But again, like, figure out what floor of the wealth elevator you're on and figure out how to get to that next level. I always think it's good to know what's beyond that, 2 levels up. I wish I did. I never had a money mentor when I was kind of growing my net worth in the earlier days in my 20s and early 30s, but I wish I kind of knew what was on the two floors above me, right? Then I wouldn't have bought so many silly rental properties, for example, right? Like, I would have just stepped up to bigger projects. Uh, Um, but I think if 40 grand is good for you, man, like, that's great, right? Like, each to their own, right?
Yeah.
I think at the end of the day, you have to you figure out what your number is. And I guess maybe here's an analogy, right? Like, when you go to the airport, you have that sky bridge or that
Yes.
moving walkway, right?
Mm.
I think it goes at like 2.5 miles an hour, right?
It's so
Um,
slow.
but like, think of that as like your cash flow, your burn rate, right?
Hmm.
Like, I tell most of my guys, hey, you guys should probably try and get 120, 200 grand a year at least. But
Hmm.
I may be wrong, right? Like, some of them are very frugal. I mean, I don't live in their life, right? And um, they could be perfectly fine with something less. But I think you don't know what your number is until you're kind of living that. And then you can titrate up or down from there.
And I like that you have the elevator set up because sometimes you can get off at a certain floor and explore that floor, but then you can get back on that elevator again and ride it to the next level. Can you talk about the different the income levels for the floors?
Yeah, I mean,
Yeah.
it's more dictated on like net worth, right?
I'm
Like,
sorry, the
to me,
net
net
worth. Yeah.
worth is your kind of indicator. But to your point, it is, if you're already making $200,000 a year, you're quote unquote an unaccredited investor. So you technically are already on that second floor of the wealth elevator, and you should probably skip over little single family home rental properties because they're just not going to move the needle for you. But just defining the different floors, basement level wealth elevator. I don't really talk about this too much, but there's a lot of great podcasts out there. Dave Ramsey, Caesar Orman, a lot of good content to get out of debt, right? But a lot of those strategies, like the whole debt snowball thing, like, it kind of is a little obsolete when you get to the higher floors of the wealth elevator, 2, 3, and beyond. But regardless, I mean, it kind of went a little ahead there, but first floor of the wealth elevator is where I started out of college, right? Like, I had a good paying job. I was kind of starting from zero, but I just used the money I had to buy little rental properties one by one by one. And it took me from 2009, I bought my first rental property, to 2015. About there, that was when I became, went over $1 million net worth. And when I got to that second floor of the wealth elevator. But I mean, I never had a phenomenal salary, when I was growing up in my career. Some people, I mean, a lot of people I work with these days, just out of college, they're making $200,000, $300,000 a year. Or like doctors, dentists, some phenomenal salaries out there, or guys in tech, right? So some of those guys will start on the second floor. But you go to this from the second to the third is when you kind of go, I would say that's, it may be a different number for everybody, but that's when you sort of go financially free, right? Or weight less. You break the Earth's atmosphere and you're zero gravity, or you've hit this critical mass number. For, like you mentioned 2 mil, right? I think
Yeah.
you threw out a number there. Sometimes they say like 4 to 5, right? So it's somewhere in there, right? At this point, you've hit this critical mass, and you may not have to invest as risky at that point. You can diversify into more cash flowing type of investments that offer less return. But at that point, you've kind of hit your number, your goal number. But it'll continue to increase
Yeah.
at that point. So, once you hit that number, most people, at least from what I see from my community, they're pretty content. They're chilling.
Get
But
comfortable, right?
yeah, they're comfortable. I mean, it's good life, right? Like people,
Yeah.
there's a lot of articles written about the 70, people are happy at $75,000 of income per year. I would probably double that, right?
Same.
But
Yeah, I was like, I can't do 75.
yeah, it's the concept of like a lot of people in the scatter chart, but there's a band there somewhere between $2 to $5 million where you sort of have enough. You have your basic, even opulent essentials there. And in another one, I know you guys talk about this, but like the concept of like needs and wants, right? You're definitely hitting all your needs and getting a lot of your wants at that point done. But now this is where like, we've bought a lot and sold a lot of multifamily apartments, and we've bought a lot of these apartments from wealthy family offices. So wealthy families who have been wealthy for multiple generations, and they may have over $100 million net worth. And, rubbing shoulders with these guys, I realized like, wow, like, these guys have obviously moved beyond that third floor of the wealth elevator, and they're good, but they've taken serious intention to investing their critical mass of money into things to get it to that next level. Not in 5 years, not in 10 years, but multiple generations, right? So that may
So
not be
like
in the
what
cards for
type of
everybody, but that's kind of the idea.
yeah, so like what type of stuff, I mean, because obviously real estate is your I guess you could say your sexy baby. It kind of gets you through those different levels and tiers. But what have you seen amongst, people at that level to kind of say, okay, well, real estate's one thing, but what other assets should people at that level start looking into? Because I see that art is another one. And then at least that's what I've seen. It's
Oh,
kind
sorry,
of like
sorry, what was that?
art. Like what is the next thing that somebody should purchase
Oh,
to kind of
yeah,
move to the next
I don't
level?
know if I necessarily agree with that. I think that's just what the guys who sell the art app,
Oh,
right? They want you to think. I
okay.
mean, they people will, but like that's considered a very like asymmetric or kind of silly kind of investment that would be a very small minority of your portfolio. And that's where like, I'm not a certified financial planner, so I'm not allowed to talk about asset
Yeah.
allocation mix, the pie chart, right?
It's
Apparently,
the
right? Because
educational purposes,
apparently I
right?
don't know anything about investing.
Right.
But you know, that's where what I've realized is like talking to my clients and like other people that I interact with that have a lot of money. There is no normal what that 60, what that pie chart is, right? Like,
Okay.
and that's the thing, right? Like wealthy people access investments directly. Regular people investments through the retail market, and they go through all these stocks, mutual funds, stuff like that, certified financial planner stuff.
Yeah.
And so that's the huge stark difference that I realized very early on. Wealthy people they don't go after what is sold by Wall Street. They have connections, right? As we were kind of mentioning earlier, and they can get access directly to the deal, and they essentially they can cut out all the middlemen. Like for example,
Yeah.
like a REIT. A
Right,
REIT is
right.
one of the biggest retail products that invests in real estate apartments, the same
Mhm.
apartments that we'll invest in, but there'll be like so many levels of middlemen in there. So by the time it comes to you, yeah, you're investing in that apartment or a whole bunch of others too. It's diversified, which is nice.
Mm,
But there's so much other people eating at the line, before you get yours.
got
So
you.
this is a concept of like, all right, wealthy investors, what they're able to do a lot of times is to get direct access to the deal or primary access.
Mhm.
Most people, regular people out there under $10 million net worth, they're retail investors. They're really accessing the investments through the secondary market or sloppy seconds, aka.
So, because it got me thinking now of like, because I recently went to a wine education class at like the basic Total Wine or whatever winery company you go to. But they were actually talking about how some of these family wineries that get started. And so I'm just using that as an example. So, say if I found somebody who actually just purchased a winery, like a wine farm or whatever, and started growing, I can partner with them. Let's say, like, hey, I'll just come in, say like a modest $50,000, just kind of come in, and then all of a sudden it balloons because everybody else with the different tiers come in. Is that what you're talking about, far as like getting directly in, cutting out everybody else, and just goes directly to the deal?
Yeah, yeah,
Okay.
exactly. You're partnering directly with the operator, or you're really minimizing the middleman there in the middle, right? Um, I wouldn't necessarily invest in a winery because they're like restaurants and they go bankrupt all the time, right? But like I mean, the idea is you can invest in anything out there, right? Like
Yeah.
businesses. There's so many family-owned businesses. I'm sure the audience have heard of like get buying into businesses, right? Same concept. Or it could just be plain old that 300 unit apartment complex down the road, right?
Oh, yeah, I need to look into that because I'm thinking about like well, how would you structure a deal then? Because I'm thinking about like if I do know the owner or actually have access to the middle person of the owner to the deal, do I just kind of come up and say like, hey, I have some money, I would like to invest in the property, or do you just kind of kick off the email? Like, what does that look like?
Well, I mean, 50,000 is not going to get the deal done in real estate, right? You're going to have
Right,
to write
yeah,
like a $10
a few
million
million.
check.
Yeah.
But that's kind of what world we live in, right? Like we're able to syndicate that, and then we structure that deal that way, to buy the asset and operate it. Um, but I think maybe this is the kind of the way you're going, like going back to that winery thing, right? Which is more
Mhm.
synonymous with buying into a business. This is actually something that I've done, operating business. I don't know anything about wineries in your case or that business. Well, I do, but I'm not the operator, right? So one might take a chunk of money, call it $1 million to joint venture on an acquisition. So I guess here's maybe a better example that's a little bit
Okay.
more tangible. So say you got a buddy who's a CPA, right?
Hmm.
He's got his own business, and somebody, an older guy in his network is retiring and he wants to buy out the other guy's book of business. You know, that's where something where if he can't fund it, maybe he brings in an outside investor and joint ventures on the future revenue of that bolt on right there. Right. That's the deal, the way these deals happen. I mean, this is what private equity does, right? But probably add, instead of $1 million, add on several zeros on top of that. Right. But, the world that we play in is kind of in this micro PE world, right? Where to me, the biggest part of these types of deals is working with the right trustworthy people.
That makes sense. Yeah, because we talked about the right trustworthy people in the last episode. So if you're listening to this, just chiming in, check out the older episode. We did talk about how to find credited people. But before because we coming up on time frame, just want to be modest of time. Um, just kind of talk about the future. What do you feel as though? I guess the future is kind of vague, but in your line of work, what do you feel as though somebody that's listening to this episode right now should start focusing on for the future?
What's their net worth, Anthony? What's their net worth at? That depends.
Okay. So let's go with let's say they got about 15 mil sitting down. They just recently retired. Um, and they just don't know where to go.
Well, I mean, it depends on their goals, right? Like if they just put their money in T-bills, they're T-billing and chilling and probably making what 75 or 750,000 a year,
Yeah, with
75
T-bill.
grand a month.
Mm-hmm.
And then you align it with like, hey, are you happy with that? Some people won't be, and then you'll have to invest in more higher risk, higher return type of projects. So I guess what I'm saying is all like, I mean, that's a math question. Um, if you're on the first floor of the wealth elevator and you got couple hundred grand, um, yeah, normally I would say buy a little rental property, but it's getting harder and harder these days to do that because everything's just more expensive and margins are just even thinner.
It's true. It's always a tough question to ask. That's always like the vagueness of the future because it's unknown. Anything can happen. Are there anything that you looking in forward to for your next level? Are you hit all five uh floors for the elevator, or are you still just hanging out somewhere?
Sorry, what do you mean?
For the elevator, for the wealth elevator, which floor are you on right now that you trying to go to the next one?
Well, I was on the pretty high floor, but I unfortunately had like a majority of my money, 90% in commercial real estate. And we had prices come down 30%. So,
Oh,
I mean, I'm kind of been knocked down. But, I still have equity in projects that are alive. So I think, just a matter of time, just holding on and, the market will come back. But what I've learned is diversification in different types of asset classes. Uh, you know, Commercial real estate, I still love it, right? Like I think the thesis for workforce housing in America, the rich are getting richer, the poor are getting poorer, and they're going to need to invest. They need to live in apartments. Hopefully, it's ours. Um, but I also, you know, I learned my lessons, right? So diversification. So I'm also looking into investing in businesses, get a little stock market exposure. But yeah, that'd be my piece of advice is be careful when you go these high concentrations. But I don't know what that is, right? Friend,
right.
I didn't study to take the test that tells you this stuff. I don't
Tell
think
you
it's
what this
even
one.
in the book, but I think a lot of people out there are very heavily concentrated in the stock market, and it's like S&P 500 is predominantly AI stocks these days.
Yeah, and I know it's always tough to figure out like what's the next move when you. I guess it's kind of good to have options, but like you said, it's good to also have a guide that kind of guides you throughout the way. So, is there anything that we didn't touch on before we dive into the final four questions?
No, yeah, I mean, you can do the final four.
Okay, they slightly modified, but we can work this out. Um, all right, so let's see. We got final four. All right, question one. For the sandwich generation listeners, what is the cheat codes in your book that allow for a busy professional to kind of leapfrog their like owning their time?
I mean, if you're able to save 20 grand a year, I mean, you could buy a rental property every year, 20% down payment. It's not a get rich quick scheme, but over the years, you buy a rental property every year, every other year. Now you're starting to increase your cash flow. And it's just a matter of time before you hit that hockey stick there.
Yes. Um, let's see. Number two. Get my list here. Um, describe to the high earners like what is high friction taxpayers. How can they use passive activity losses, or you call them PALs, to kind of get. In fact, let me trash that question. I don't like these sub questions. I need to come up with better ones because I love my questions when it's short and sweet, but maybe they change. So, all right, let's go with this one. Number two, like, what was your biggest money lesson?
The diversification one recently.
Then number three, like, what book has changed your perspective? I know we mentioned one from last time, but has it changed?
It's not ever one book. I mean, I always just try to read the top 1,000 business books, right? Whatever's popular at the time. I tend not to read books over again. That said, you are always a different person when you read it, I guess. But yeah, I don't know. I'm just an avid reader, or I listen to it, right? So always like a book a month or something like that, or book every couple months.
Okay. So what are you reading right now, though?
I'm not reading anything. I'm on
Oh.
vacation. Honestly, like
That's
it's
better
probably
start.
some type of business book on some marketing or ads, I think, or something like that. But I mean, I'm a little bit all over the place. Like something that I'll do is, I mean, I do a lot of business coaching and I'm in a lot of CEO groups, EO, but we always self-reflect every month and I'll take that transcription, I'll just throw it into AI and be like, hey, what book should I read? So you guys can use that tip too.
Cheating.
Yeah. Well, I mean,
Number
it kind of catches you on your biases, right? If not,
yeah,
you're kind of like like my kid always just likes to do things she's good at, right? Like
yeah,
after a while, you just start reading the same books that you're good at.
that's true. I mean, I did that when I was younger too. It's like green eggs and ham. Let me just run through these real quick
Yeah,
just to say I did it.
yeah. Go dog go, right? Or like
Right.
just kind of mental masturbation with 4 hour work week. Like
So masturbation, I love it. Uh, number four. What is your favorite dish to make? I know I like this one the most, but
um probably sushi. Yeah.
sushi. Okay. Too easy, too easy. Yeah, 'cause I think last time we talked about you made ramen noodles.
Oh, no, I'm not. Yeah, I'm more fat fire these days. Yeah.
Nice. So, man, Lane, this has been amazing. So where could people find out more about you?
Yeah, they can check out my book on Amazon, The Wealth Elevator. If they pick up a copy and take a screenshot of their nice review, hopefully, fingers crossed, um, shoot us an email, team@thewealthelevator.com, and we'll hook you up with the free PDF version. So if you're like me, you do that in the chat GPT and you ask it your more personalized questions from there, and we'll give you the MP3s. So if you're also like me, you can't read too well, I'll read it to you. But yeah, thanks for having me, Anthony.
Yeah, it's always a pleasure to have you on. Can't wait to hear how things turn out, and congratulations on life and everything that's been happening to you, man. All right, everybody. Y'all be safe. We out. Peace.